Happy Monday and welcome to TipRanks News Bites. I'm Ari Gutman, and our top news bites for today, July 11th, the beginning of what could be a very volatile yet foretelling week for our economy commences according to the economic calendar. Elon Musk gets cold feet on that Twitter deal, and on a global front, Chinese factories are reporting declines in the demands from abroad. After the release of the Federal Reserve's FOMC meeting minutes last week reiterating a firm commitment to contain and chop down inflation, a steady unemployment rate hovering around 3.6%, and Friday's better than expected June jobs report, where the U.S. economy added 372,000 jobs, we ended last week with all three major indexes in the green. However, many investors are now bracing for impact heading into this week with an economic calendar that is fully stacked and is expected to rattle the markets. The week ahead brings us right into the second quarter earnings season, with major banks like JP Morgan to Wells Fargo and Citigroup all releasing their earnings results, as well as reports from other major companies like Pepsi and Delta Airlines. Investors are going to be watching very closely for signs of softening in the economy. Now, coming to Wednesday, the latest consumer price index, or CPI, report will be released, and already has economists expecting that report to reflect another rise in inflation above 8.6%. In terms of the yield curve, it's already inverted, with the 2-year Treasury trading just above the 10-year, and that's going to continue to be monitored this week as well, as it historically predicts recessions. And finally, to wrap up the entire week, initial jobless claims reported on Thursday, followed by June's retail sales report on Friday. And despite all the recent attempts for the market to rebound, with such a loaded economic calendar in the week ahead, we can expect choppier trading days ahead. Now, in other news, Elon Musk has recently pressed forward with the termination of his $44 billion deal to buy social media platform Twitter. After weeks of expressing concerns that the platform had a greater number of both bots and spam accounts than Twitter initially made public, a lawyer representing Musk issued a letter to Twitter's legal team stating that Musk will be terminating the deal because Twitter is in material breach of multiple provisions of the original agreement. However, the Twitter board restated their commitment to close the transaction on the agreed upon terms with Musk, and stated that they're going to pursue legal action to enforce the merger agreement. Now, the team remains very confident that they can prevail should matters escalate and transpire into an all-out court battle. Now, Twitter shares fell on Friday roughly by 6% in after-hours trading, and make sure you stay tuned because this seems to be only heating up. And finally, on our global news front, even with declining freight costs, especially regarding ocean freight, as well as reduced import tariffs, manufacturing facilities throughout China have been reporting steady declines in demand from the United States as well as throughout Europe. Now, economists and traders were previously coping with what they recognized as merely just supply chain disruptions, but now they see demand declines as well, and it's all pointing to increased recessionary pressures. Now, ultimately, these slowdowns in trade can lead to significant downturns in global growth, and only leaves investors in need of more economic data to further make sense of the current consumer sentiment. Now, Tip Rankers, that's our news for today. We'd love to collect your thoughts on the current market conditions, so feel free to leave a comment or two below and let us know. As always, be sure to stay up to date, stay informed, and always connected by joining us on TipRanks TV, all the shows you cannot afford to miss. Until next time, thank you for tuning in.